Hello, traders. Hi, Richard. Ryan, how are you? How's everyone doing today?
Good morning, Dale.
Hey.
Good morning, everybody.
How are you, K-Man? You're the guy I want to talk to.
I'm good.
Anyway.
Good. How are you?
I'm pretty good. I want to talk to you about what's happening here in some of the different currency markets. Can you see my screen?
It's still black for now.
No,
yeah, nothing yet, mate.
Okay, thanks.
A Wall Street Journal reporting here some banking news that banks are said to be debating a plan to expand
Okay.
I admire you for getting up so early every day, Dale.
Oh, yeah. It used to be easier. I wanted to ask you guys, so the dollar made a new high, right?
Mm-hmm.
So, and the argument is, what the dollar does, the euro does, because it's such a big part of it. And when you go to the euro, and we're already off quite a bit, euro held 78.6 back.
By the way, I still can't see the screen. Can anybody see
we
this?
still can't see the screen.
Oh my
black.
goodness. Oh
Yeah.
gosh. All right, let's try it now this way. There it is.
Let's
Now?
see. Yes,
Yeah.
we got it.
Yay, Dale,
Third time lucky.
the no tech analyst. So, a nice little reaction at 78.6 after the dollar made a new high. Does that mean anything?
I think the dollar had a really good rally against everything yesterday because Brainard added a layer of hawkishness to
Right.
what FOMC expectations may be. So the dollar had a big rally, yields higher, but the euro is a bit complicated in my opinion. There's so much weighing on it, but also so much uncertainty coming up with this week's first round of the French elections, then ECB in the slipstream.
So it's an I don't know. So it's still an I don't know.
Yeah,
right?
I'm actually still on the bearish side.
Okay.
I like to sell rallies on the euro dollar, and I'm long dollar yen, so that's all
Yeah,
right.
That was the next one I wanted to ask you about, K-Man, is after this initial break, I know we're a little bit above 61.8,
Yeah.
but compared to what yields did, it's almost anemic. Don't you think? Look at this, took out highs by, about 15 bips. And so far, the yen has managed a little bit more than 61.8 back.
Mm-hmm. Yeah, but it's anemic compared to what it's done in the run-up from 121 to 125. But that was a pretty violent move. So
Yeah.
I still think it's bid. It's undeniably bid, but it's also struggling a little bit with the big figure syndrome. Yesterday, we stopped, or the day before, we stopped 3 times clear at 123 the figure, and now we are repeating the same at 124 the figure. Just a couple of pips above, and then it came back below. I think there's a bit of natural interest. Would it be from Japanese exporters or people hedging option structures or the Japanese money managers? There seem to be some natural offers every big figure right now.
Okay.
There's also times when dollar yen becomes detached from the moving yields. If yields go too far, the fundamentals of the currency take over, and like K-Man says, the offers line up. No matter how high it goes or how high yields go, the offers all outweigh in the currency what the yields are doing.
Yeah, and
interesting. Well, it's certainly not. You got big risk off in 2 days.
So we also have to note that dollar yen did not go much lower when the yields corrected. The 10-year corrected for more than 20 BPs, right, or 30 BPs. Dollar yen didn't really come off.
Okay, Stel, your stop looks good today from yesterday.
Yes, well,
Okay.
It's one of those, well, not one of those times, but you have to be in these markets, which are, we've seen, quite volatile. You have to be disciplined, and you put your stop where you think it should be. And the worst thing is to move it. Obviously, you can move it to the right direction.
Oh, that's a CIC stop.
Sorry?
You know what that is? That's a CIC stop.
What is CIC?
Cancel if close.
I've never heard that, but that's a good one.
All right. Yeah. And this is saying that it's a possibility, especially if we break out here, that's not going to be bullish metals, right? So, you could have a much better buying opportunity in the metals if this happens.
Yes, I think that as yields are rising and the dollar gets more strength, at least in the short term, especially if we get stocks correcting more, I think metals will have to, in the short term, correct lower as well. And like you correctly say, the gold to silver ratio is going to test that trend line. So now I'm no longer looking to buy at 2401 as I did before in silver. I think we may be getting, we may be on our way to something more like 22 in silver, but we'll see. It will depend on a lot of things. We have the FOMC minutes today. It is a fact that Brainerd said a few hours ago that quantitative tightening could start next month, which is, Brainerd's supposed to be one of the doves. And so the market's getting a little bit more worried about yields, about the Fed actually carrying forward with what they're telling us that they're going to do, maybe even at a faster rate. So I think the chances of 50s now coming in the next couple of meetings, especially the next one, provided we don't get World War III or something like that, I think that the market's going to price almost a 100% chance of a 50. What is it pricing now? Something like 75%, I think. I have to check Fed Fund futures, but there seems to be no reason for the Fed not to continue. And as we've said before, Blake has said it, I think you've said it, Dale, as well. As long as equities are not collapsing, the Fed sees this window of opportunity to do as much as they can, because we know it's not their mandate, but we do know they're very sensitive to equity markets. So as long as equity markets, okay, we're down a little bit from the highs, but really it's, if you look at the weekly charts, it's a blip. So as long as equities are here, they're going to be doing 50s. They're going to try and unwind their balance sheet. Now, who's going to be buying treasuries that need to be issued? I don't know. But that's, I guess this is we'll cross that bridge when we find it question.
Yeah, pretty ugly week with, a couple days to go in S&Ps and NASDAQ. It looks like a failing rally. I don't know where I would be looking to buy it here. 4,400 possibly in the S&Ps, but try maybe the 200 here. It looks ugly to me. I'm saying right now this could have been a failing rally in the market up here.
Yeah, it doesn't look bullish, does it?
For those wanting to sell stocks, perhaps there's a chance actually on today's FOMC minutes. Because Brainerd and George yesterday really added a layer to the Fed's hawkishness, which might not transpire yet in those FOMC minutes. So there could be an algo-driven correction, perhaps in the dollar and the equities, if the minutes come out slightly more or less hawkish than what Brainerd was saying yesterday. It's going to be an algo-driven blip, but there might be a chance to get a better level for those who want to be short.
Hey guys, good morning. How's everybody doing?
Hello.
Good morning, Blake.
Hey, good morning. I was wondering, do you guys think on the minutes that that there's going to be any talk of how much runoff they want to? Dollar amounts they want to do on the balance sheet? Do you think there's going to be any of that today?
No.
There might be such and such said they wanted faster or more and things like that, but we've had all the squawkers since then. That's the problem with the minutes these days. The minutes used to tell you an inside story, but as soon as the FOMC's finished, you get floods of Fed speakers coming out and saying what they think. So it's sort of distracted from the importance of the minutes. But as K-Man says, you look for any outliers in the minutes that are going to give you an algo move against what those Fed speakers have since said.
Yeah, no, I'm just, I don't disagree with that. I was just more wondering about like if there's going to be anything, you know,
specific,
if we're expected any dollar amounts in the balance sheet. There's you know, some murmuring that there might be. So I was wondering what your guys' thoughts were there. What's that?
I think they would have announced the numbers, because they have to give the order to the New York Fed to execute or not execute trades and things like that, because I think it's the New York Fed who does the whole FOMC, Federal Reserve market interventions. So if there would have been numbers, they would have been announced in statements or in the New York Fed on the New York Fed page. So I don't think we'll see any numbers.
No.
Gotcha. Hugo asked if I was far from the mic. Is that better? I might have been.
You were a little bit.
Huh?
A little bit.
A little bit, yeah. Maybe
better now, yeah.
Okay, yeah. It's just, it was early in the morning, having something in my face at like, you know, it's time in the morning. You know how it is, Dale. So anyway, well, I can take the
Go ahead, buddy.
here. So what are you guys looking at today? I mean, you know, equities are down pretty good. You know, I was looking at Bitcoin out. We're having a little bit of a breakdown here, but look at equities really peeling away. I gotta tell you guys this, you know, and we can talk about this concept a little bit, because I think it's important for you guys that are trading, at, you know, just at home. You know, these are kind of the issues that we talk about during the daily roundup and, you know, the morning edge. So, you know, over the last few days, you know, you go back like a couple of days ago, I was long some yen or some euro pairs, Euro Aussie, Euro Canadian, Euro New Zealand. After the RBA, the Euro Aussie stopped me out. I got up the next morning and I took the other two trades that were that I was long, and I took them off the table, and I took losses in them. They were small, you know, fractionally small enough to where it wasn't too big of a deal. But, you know, when you have the, you know, same side on multiple currencies, like, so in this example, I was trading the Euro crosses, but I had 3 small positions in Euro crosses. I took those off for a loss, right? Especially after the RBA, the Euro Aussie broke down. If you guys didn't see, I was just trying to plan off this the support right here, and at post Euro Aussie or post RBA, it broke down, right? So as a result, because I took a couple of losses, I was short the S&P yesterday, and you know, I've been short the S&P for the last few days, and you know, after we failed up here, and as we were breaking down towards the 45, you know, 45.20s or whatever, I took it off the table. But I took it off the table because it wasn't because I was looking at it going, you know, I need to you know, it looks like we're hitting support. I took it off because I wanted to close the position, to book some profits, to make up for, you know, the majority of my losses, actually. But I did, and for me, it was a psychological, you know, trading psychological need that I had to fulfill. So I felt not better about taking losses, but I didn't feel horrible about, you know, just having so many losses at once. Do you guys ever do that? Like, you trade, it's almost like trading. I didn't want to say I was trading my P&L, but I was trading my P&L. It was more of but it was more of a, if I take so many losses at once, psychologically, it starts to weigh on me. So just booking a profit sometimes make me feel better about, you know, so I'm not just taking so many losses at once. Do you guys ever have those feelings? And do you ever do that? And because I look at it right now, and I'm like, what?
One of my most satisfying times on the live floor was when you do something like walk in first in the morning, 7 o'clock in the morning, the pit opens up, you have 2 or 3 trades, you're losing them, you're down, and you spend the whole day grinding the losses back. And if you get back to flat by the end of the day,
it's like the biggest achievement in the world.
It's like a win. Yeah. And you feel so satisfied that you grinded away at that.
Oh yeah.
Literally minutes, 2-3 trades, bang. You've done, £1,500, £2,000, and you're like, what the hell's gone on here? And then you just go out, you get a coffee, you come back in, and you just work your nuts off, scraping every pip back. And if you end up flat, close to flat, or just down on commissions in the day, you feel like you've had a winner.
Oh, I've definitely had those days. My goodness. Yeah. But that's how I felt. That's how I felt yesterday. Because I'm looking at and of course I'm looking at the S&P right now, and I'm looking at it going, damn, I wish I was still short, because I had the right call. If you guys watched the week ahead video, you watched last week I talked about the failed breakout above the, it was just enough just to squeeze all the shorts out, and then of course we reverse. So I knew it was the right trade. And it's a shame I'm still not short the S&P, but that's okay. I had to do what I had to do at that moment to take care of my psyche, because your psyche as a trader, you are your own worst enemy, right? I think all of us could agree with that. And it's important to keep your head straight when you're trading. And sometimes we do things in order to do that. Like, like most of the time for me, I'll give you a perfect example. Going back to what I was doing just yesterday, I guess it was yesterday. So, when I got out of the Euro Kiwi, right? I got out of the Euro Kiwi as it was near its support, because I personally thought it was going to hold, which we have thus far. But I still took it off for my peace of mind, right? Like, I took a loss, but I took the loss because I'm like, I don't want to have to sit here and watch it and let it weigh on me. So then, therefore, I end up missing a bunch of other trades. And I think a lot of traders do that. And I think that's a big mistake, right? A big mistake is go ahead.
On the other side of that, I'll take my example, being on the floor. If I had that early losing streak, if I walked out, cleared my head, came back in, and my next trade was a loser, bang, I was out the door. That was it. I just resigned myself to the fact is I'm not going to have a good day today. No matter what I do, I'm leaving. I'm walking away from it. I'd go home. I'll be back home before the wife was up, because there's times you've got to also know you don't revenge trade. You don't try and claw back the losses. If you try to do that and your next trade is a loser as well, switch it off, walk away. You're not in the place for that. It's not going to happen. Come back the next day and try again. You don't want to keep compiling the losses because you're trying to chase back the first loss you had.
Steve said I went for a run yesterday. I can relate. And that's good. I mean, sometimes you have to do that. And look, guys, the reason why I'm talking to you all about this is because I want you to know that you're not the only one, right? There's that was my mistake. You're not the only one, right? You guys are we as traders, and I've been doing this for almost 25 years now. I still obviously have to grapple with issues when I trade. I'm always working on something, and that's going to be a nonstop process throughout your entire trading career, right? It really is, and it's something that, because the market's always changing. And when you talk to people and you have mentors in the market and blah, blah, blah. Let me just point out maybe the obvious for most of you, but maybe not the obvious for some of you. Look, we are traders and we take losses and we talk about them too. There are people out there that you will come across that never take losses. They're never wrong. That is those people that you run across, you should probably run the other way. Right. Those are the people that, they're not being realistic on how how things actually operate in the market. And that's why, it's important that you have a good community, people that you can talk to. And that's like the ForexAnalytix community. We talk about this stuff all day long, like about trades, what went right, what went wrong, what we're looking at. There's different ideas. There's, obviously the trades room where we're, talking about specific positions, and, we get trades wrong. And then you got the flowonomics where you're talking about, the macro point of view. We have, our community is really awesome in that sense. And
we're there for these sorts of questions. And
I'll tell you, it's when I'm doing the daily roundup, we have conversations about, why, or how I'm handling these good trades or how I'm handling bad trades. And because I talk about my positions, like, hey, I'm managing this trade and it sucks right now. It's hard, but that is the important part of trading, is having a community where you can talk about those types of things. People that
you need a lot of self-reflection and self-analysis too. It's like if you go and play golf, sometimes you turn up in the golf course, every shot you hit will be a peacher, every single shot. Other times you turn up, you can't even get the ball to stay on the tee. Right. And there's time. That's the same with trading. You have to know
that's
where you're at.
Problem. That's actually more of a Ryan problem, not a Blake.
So but you have to analyze what's happening. Some days doesn't matter what you do, you're not going to win. And if you know that's happening, you need to walk away. And on the other side, if you're having a stormer of a day trading, keep going, and use that momentum to make that money while you can. But you've got to self-analyze yourself as much as you do the market.
Some days it's like you're not going to win no matter what you do. It sounds a bit like my first marriage.
All right. Well, hey guys, we got about 10 minutes to talk about. I want to just talk about some specific setups, but really quick, I just wanted to make sure that everybody knows that, hey, that's the ForexAnalytix community. I mean, there's a lot of traders that are listening into the F.A.C.E webinar that have been listening to me for over 15 years, and they've heard the same stuff from me, for years, because I've always talked about the positions I'm in, what I'm trading, and how I'm going about it. But it's a departure from a lot of places that you're going to go to and people you're going to hear and come across in the markets, because we are traders and we do deal with the ups and downs of the markets. And if you're coming across people that don't, you probably need to go the other way and come back here and and talk about what's really happening in the market. So let's talk about like a couple of these setups that I'm seeing, and one of them being the euro dollar. Now I am long euros right now. My positioning in the euro is not the best, but I'm also taking this from a more longer term perspective. In other words, as long as the euro is above 108 on a closing basis, and I would even go about to say as long as we're above 108 on a weekly closing basis, I wouldn't even mind a probe below 108. Well, actually, let me take that back. I don't want to see us go below 108, but I would cross that road if we got there. This is a really big support as far as I'm concerned. I don't mind being long some euros right now, especially ahead of the ECB next week, because the ECB meeting is next week. Right, K-Man?
Correct, Mundo.
Yeah, and K-Man was talking about that in the chat room today, for those of you that, had not been, or were unaware of it, this week. But that we have the ECB next week. And I'll take your thoughts there here in a second, K-Man, Ryan, if you guys, and Stelios, if you want to talk about it. But what I'm saying here is, as long as we're above 108, I'm not worried about it, because I'm looking for the euro to trade up towards 111 and change, maybe even higher than that, based on if things improve in the Ukraine situation. But we have a lot of support here, and what is going to be really important today is if we do not create a lower low, if we continue to create a higher low following the FOMC meeting minutes. Now, if we get the meeting minutes and they come in a little bit more dovish, then not as hawkish as the market expects. Let's just put it that way. then maybe the euro does trade back up towards 110. That's going to do a lot for creating that higher low in the euro. Doesn't mean that, the euro is on its way to 113 yet, but what you'll notice here is we do have higher highs, right? And what's possible are higher lows. And so just keep that in mind as we go through today, because this is gonna speak a lot into the next week, in my opinion. So do you guys have any opinions about next week going into the ECB? Ryan, any opinions there?
Yeah, I'm feeling a little bit more negative on the euro at the moment. K-Man's been saying it in the room about how much his weight is around its neck at the moment. French elections, ECB, Ukraine, dollar strength, Fed hikes, and everything. I'm just not feeling it. I can see it going lower. I can, and there's a big fat target at that 108. Everyone's talking about it, and I don't like it when everyone's talking about something like that. It's good. It's going to take a lot, I think, a lot of ducks to line up to get any meaningful upside in the euro. It's going to need ECB turning hawkish. It's going to need a positive result from the French elections. It's going to need some easing in the Ukraine. You get a hat trick of those, then we're going to see some decent upside. But I'm wondering, even the ECB turning mildly hawkish next week, I'm not sure whether any rally from that is going to last, if everything else is still hanging around its neck. So I'm not overly bullish at the moment, and the euro is something I've been bullish on this year.
Okay. K-Man, what are you thinking ahead of the ECB? I mean, I know, anything can happen when the ECB, meets, but what are you thinking ahead of then?
I'm still bearish euro overall, for the reasons that Ryan just said. I spoke about the same things in the room this morning. I'm still bearish euro. There's a lot of weight on its shoulders, and but it's going to depend on positioning. Next week into this ECB, we may see some really funny moves. If the market thinks that that ECB may all of a sudden turn a bit more hawkish than expected, we may see a corrective rally in the euro. We may see a corrective rally in the euro crosses, because the people are exposed right now. I can imagine money managers sitting around, or the model funds sitting around very short euro commodity, euro Canada, euro dollar as well, because of the addition of Brainard and George's comments yesterday. So a relief rally, yeah. Can it last? I'm the same as Ryan. There has to be many things changing to get the euro lastingly on a reversal.
Okay. All right. So and I agree with everything you guys are saying. Stelios, do you have any opinions heading into the ECB? I mean, what the hell is the ECB going to do with these inflationary pressures that are building? Are they going to actually have to be hawkish and make a move and set expectations for rate hikes to be more aggressively coming in 2022? What are your thoughts there?
Well, that's a really good question, because theoretically they should have already turned hawkish. We've said this so many times. I think it's a matter of time. I really do, with inflation where it is, and with the whole situation being the way it is. I don't see how they can blatantly ignore their one and only mandate. I just don't get it. So, I think they've jawboned, they've said everything they can. And I think the time is coming for them to turn hawkish. Will they do it this meeting? I think it's 50-50. I said that before. I don't know is the answer, but they have to do that. And trade-wise, I've said it before, I'm going to say it again. I'm waiting for the euro to break below the lows in euro dollar and euro pound. I think euro pound is probably going to be closer, or let's say easier. And once that breaks, and I think you're going to see lots of stops and outright shorts down there. If that turns out to be a false breakdown, then I'm going to get in, whenever we turn. If we don't, then I'm going to leave that trade. I'm not going to chase anything either way. But I think there's a good chance if the ECB the next week doesn't say something hawkish, which I think is 50-50, we're going to see the lows get taken out in both euro dollar and euro pound. And the question is, how does the market trade after that? So,
all right. Well, do we have any news coming up real quick? And by the way, just for those of you that are not, let's just go. Let me just see.
We don't have any data. No.
Okay. We don't. It's just Canadian IVPMI and then the FOMC meeting minutes later. Okay, great. So let me take a moment since our guest canceled today. We're going to stick with you guys for a little bit longer. But before I do that, let me mention just a couple of things. If you guys haven't tried the Trader Funding Program or you don't know about it, I'm going to put a link in the chat box about it. We just had one of our traders yesterday just pass his assessment, and he's moving on to a live trading account. That's
great.
Yeah, it's really cool. It's awesome. JD just passed. So if you are trying to access more money let's talk about the reasons you may do this. A lot of people, they just don't have access to $250,000 to trade, or $500,000 to trade. They don't have access to it, or if you do, you just don't want to risk your own money. This is a good option for you. You do have to take an assessment to see if you can actually qualify to trade our money. The assessment's really very straightforward as far as your drawdowns, the max drawdown, and then what you have to achieve. And maybe Stelios, do you want to just tell everybody what those numbers are?
Yes, very, very simple rules. Your target is 10% gains. That's what you need to get in order to pass the assessment, and you have unlimited time to do this. There's only one caveat, that you have to make at least one trade every 45 days. I think that's pretty generous. There is no other fee apart from the initial assessment fee. And what you have to avoid is either losing 4% in one day or 5% in total.
Yeah.
So
you know what you said is really key is unlimited time. We've come across some companies that do prop trading, and we said, well, why are you limiting people by the amount of time that they have to finish the assessment? And then we figured that out pretty early. It's like, because you're forcing people to trade, and then they make bad trades. Then they fail the assessment. Then of course they want to try to do it again. So you're creating that vicious loop for traders to, setting them up for failure every time. So we said, screw that. We're not only are we going to give you unlimited time, we also give you ForexAnalytix for a certain period of time. We can't just give it to you forever, but we give it to you for a certain period of time based on what account you are accessing. And when you do that, you get to jump in our community, and you get premium access so you can get ideas. You can talk about what's going right, what's going wrong. We actually have a discussion set up specifically for the Trader Funding Program, which is great, just for people that are in there, right? Ryan, it sounded like you were going to say something.
Actually,
go ahead, Stel.
Sorry. I didn't realize. Sorry. I just wanted to add one thing. This daily 4% drawdown rule is actually very helpful for traders, because it kind of drives you to take controlled trades. You're not going to go all in on something. There's obviously a size limit as well. You can't, the effective leverage, I think, is 1,000 to 1, right? Because you're accessing 100 times the amount of the fee, plus you get 10 to 1 leverage on top of that for FX, and I think it's 5 to 1 for equities and 2 to 1 for crypto, something like that. Basically, it's a good thing to have such a restriction for daily loss, because that makes you think even more. You think harder. You try to get the right trade on, the high probability one. So I actually really like that, and it avoids giving you the opportunity of just going all in, red or black, I win, I lose. You don't want to do that. You're not gambling, right?
No. And the fact of the matter is that we are, it's been designed because it's been designed to control your leverage so we can foster good trading habits, not bad ones, right? So anyway, hey, I just wanted to mention that because the trader funding program we just released it less than 2 months ago. We've had many traders that have accessed live trading accounts, and people are trying the assessment. And I've been surprised, actually, even based on the volatility that we've seen not as many failures in the assessment process as I expected. Because you're going to be there are failures, of course, because people are learning to manage risk. But I expected, with the volatility that we've seen over the last 2 months, I thought it was going to be at a very, very rapid rate. But the fact of the matter is, people are controlling the risk. They're taking their time and chipping away, and that's how you actually get an assessment passed.
Sorry, Blake. One of our friends is asking what the spreads are like. This is the provider, the broker for this is 8cap. So the spreads are very tight. You can go to the website and you can.
I've had a friend of mine who's going through the assessment, and he's just like, dude, the spreads are awesome. And he's like, because he's done a couple of assessments. He did an assessment with another firm. And he's just like, your spreads are awesome. I'm like, hey, it's an 8cap. And also, as a US based trader, you get to trade like over 250 crypto products, both directions. And as a US based trader, that's awesome. It's really cool. Anyway, I'm sorry, I could go on and on and on about it. I just wanted to mention that really quick, but let's continue on with FX. And let me just say that if you guys don't know this, in about 40 minutes from this moment, myself, and then Steve and Stelios, we go through, these instruments, top-down analysis, these instruments, we go through our bias chart. This is something that I build out every day with our client base. And everybody joins in live. We talk, we chat about the markets. We talk about all these. And then, after I'm done, Steve and Celius really start to answer all the questions that have come in and look at all the other markets that maybe I didn't touch on through the analysis process. So that's going to happen in about 40 minutes from now. So I just want to let you guys know that, you're just, getting the, that's private for our ForexAnalytix subscribers. Right now, you're just getting kind of a brush of what, what we talk about every day. So let's talk a little bit about the Aussie. Like the Aussie, in my opinion, breakout territory. We're holding it. It's at 45.50. And if you read like yesterday's analysis, the end of day, the close above the 75.50 level is a bullish breakout, and we have stalled below the 61% retracement, 161% confluence. So you'll notice that this resistance held. So this is the high, low, 618, 161% extension of this last move lower. And that confluence, we couldn't close above it. So that's a risk for the bulls right now. But as long as we are above, let me get rid of this blue line because that blue line is not relevant right now. As long as we stay above this breakout point, the bulls are I like to say the bulls are still in control. But if we get below 75.50, in the Aussie, I would be a little concerned about being long Aussie dollars. I'm not saying it's going to break down, but I think that, you have to be a little careful here if you're bullish. We have a bull flag that still points a lot higher, but this market's been pretty good about creating false breakdowns, false breakouts. Not in just the Aussie. I'm just talking about asset classes in general. We've had a really big move in the Aussie dollar since we were at 70 cents just a few weeks ago. So now that we're at 76 cents, 6 big figures later, you've got to start being a little bit more defensive, in my opinion. You guys have any views on the Aussie before I move along?
Yeah, I think you're spot on with your numbers. We had the break point 72 break points really. That 75.40 area was the first step, and then the 75 sort of 57.60 area was the secondary one. That's the main one, as you say, needs to hold. If we get back under that 58.60 level and probably 30, then this rally's in trouble. but then we just bring it back to the price support, down into the 74, 60s, 70s, that sort of area, where we then probably find the next band of support. It's hanging in there. We had a couple of RBA speakers this morning. They were up in the talk on how wages are maybe looking to start rising. Businesses are starting to look at it, wages. Aussie strength isn't an issue. So a few little green lights there. But I think if it wasn't for George and Brainard yesterday and the hawkish Fed comments, I think we would still be up above 76 in this pair.
Yeah. So let me ask you guys really quick, and then we're gonna go ahead and close it down for the day. I know our guest didn't make it today, which is fine, but I want to spend a few more minutes talking about this. And this is a concept that K-Man, are you still here? Let me check really quick.
Yes, sir.
Yeah, you're still here. Okay, let me ask you this. You guys, but all your opinions, Stelios included, and Dale, if you're feeling up to it. We have not seen. Well, let me actually take a step back for a second. The S&P has actually been on a nice little rally. I still think we're creating this head and shoulder pattern, big head and shoulder pattern. You guys know I've had this chart drawn out like this literally for the last 4, 5, 6 weeks, and so I haven't changed it at all, other than this was down like here, and then I just kind of moved it back up here because I think it's we still have some time that we're building out the right shoulder before we even hit the neckline. So let's just say the S&P, let's just for argument's sake, let's just say I'm correct here, and the S&P ends up drifting lower over the course of the next couple of weeks, and we head down towards 4,100 again, towards that next neckline. Now, whether or not we break down or not is to be seen, but let's just say we make our way down here over the next couple 2-3 weeks. Will the Aussie lose a bid, or let me take this back? Will the commodity currencies or emerging market currencies lose their bid if we see a let's just call it what, 6-7%, 8%, 9% correction in the markets from current levels? What do you guys think about that? Do you think the commodity currencies will continue to hold up and the emerging market currencies will, or do you think they'll eventually give up the ghost here? What are your thoughts?
They'll correct.
You guys think they'll correct? Dale, you think they'll correct?
Yeah, I would say so.
Wait, did I just hear Grega?
Yeah, I'm here. I'm listening.
Oh, yeah. Hey, I didn't even know Grega's here. Well, hell, Grega, we can keep you around for a few minutes. We'll give everybody a little bit of Elliott wave analysis here if you got a couple minutes. But I didn't know you were here. Okay, so hold your thoughts there, Grega. Ryan, what do you think?
I'm going to go slightly against consensus. It depends on what's driving it. I think the Aussie dollar at the moment is potentially more looking at what's happening in China than what's happening in the US in terms of stocks. Shutdowns going on there, data's turning south over there big time. That's more of a weight than what the S&P does, I think, in the short term.
All right, fair enough. K-Man, what are your thoughts?
Yeah, I think correction, but it may also be much slower than anything else, because they still, in a way, benefit from being far away from the misery that Europe is facing. So, I'd agree with Ryan. It might be less correlated with S&P than others.
Okay, well, okay. So that means you could take like a pound Aussie and realize that it's still trading down to 70 cents is 170 is still doable. Okay, all right, fair enough. Stelios, do you have any opinions here? I think he left. All right, well, I think he had to deal with his daughter. So, Grega, I didn't know you were here. What are your thoughts?
Yeah, I think that the key support for the S&P should be around 4,400. So if this one holds, then of course commodity currencies will very quickly again stabilize. But I'm watching also New Zealand dollar, and you will see that we have there a wedge pattern with the recent sell-off. If you connect from that low, yes, exactly. And you have this very nice reversal candle at the top. So I'm concerned that this could be driving us lower, especially if we see S&P 500 falling below that 4,400 key level. Then I think that this one should be much, much lower.
Yeah, it's interesting you point that out. I was so yesterday I didn't draw out the lower trend line that you see here that you'd pointed out. I drew the upper trend line, and I told everybody yesterday, I'm like, hey, if we get to 70.50, that's a sell up there. It's bullish, but if we get up to 70.50, which you can see, I wrote that out yesterday. I thought we'd spike up to the 161% extension and reverse. And I was looking at this trend line, and actually we didn't reach the 70.50. We reached 70.35, I think is the high yesterday, if I'm not mistaken. I'll tell you here in a second. The high was 70.34. So it's right up into, we obviously stopped shy. I was, didn't make it all the way up there, but I thought it would. But as you pointed out, we do have an ascending wedge, and ascending wedges by default are reversals. So good eye there. So you think the Kiwi might actually lead the charge then?
Yeah, actually I'm short since this morning.
Oh.
Yeah,
wow.
With the stop at the highs, and if we print a little bit more higher intraday high later on, I will look possibly to add. It depends how stocks will react. I mean,
so you're looking at that.
Yeah, and stocks are just making a sharp extension slower. So I think if this really will stay in play, that Kiwi will catch up.
Awesome. All right. Well, Grega, thanks for your thoughts and your opinions. And for those of you that don't know who Grega Horvat is, I didn't know he was going to be here.
He's a wizard of waves.
Wizard of Waves, and provides us with the Elliott wave analysis and there's the New Zealand dollar, exactly what he was looking at and exactly what he's talking about right now. It's all in your ForexAnalytix, Elliott wave analysis. You can read it all right here, and it's exactly what Grega is talking about now. So
there's not a better collection of talented traders that care about people than right here.
Yeah. So I want to say, Grega, thanks for joining in and providing your opinions. And guys, I want to say thank you to the entire team for being here. Dale, I know we're stretching you out a little bit, but you guys all, for those of you that are listening in, thank you so much for spending your time with us and helping build out our community. For those of you that are just newer to the ForexAnalytix community, and for those of you that have been around me for the last 15 plus years, thank you all for your support as always. We have the morning edge coming up in exactly 30 minutes from right now, so I'm gonna let you all go, and Dale, pass it off to you.
Okay, guys, and team, thank you very much, and everyone out there, take what Blake was talking about and his psychology and Ryan about their psychology to heart. I'll just add that nursing a loser and financing a loser, and then watching multiple very good trading opportunities be there, but you're risk averse because you're nursing a loser, is painful to watch all those opportunities you see. So I'll leave you with this: surround yourself with traders better than you, and you'll rise to their level. And it's right here. So don't just count your pips, count your blessings, and we'll see you all tomorrow.
And don't forget to sign up for the Trader Summit event, guys.
Yeah, there's only 3 seats left.
3. Well, there's a few more than 3, but we can go with 3 if that's what you want to go with.
Steve needs 2 of them.
All right, guys.
I was going to say your ass needed 2 of them there, Ryan.
I got him first. There you go. Quick in this game, mate.
It's going to be a great event, great speakers. Make sure you guys are all registered, and I'll see you there. Actually, on Friday, are we still doing the morning edge? Damn, I got to take a look at its schedule. We'll still be doing the FA.C.E webinar, I'm sure. I don't know. We'll figure that out, but I'll let you know tomorrow. All right, guys.
Adios, everyone.
Thanks, everyone.
Good luck.
Bye-bye.